G'day folks, welcome back to another update for Bitcoin and Ripple. Now it's still bearish, but we're almost about to break into a bullish momentum. So very cautious in the coming days. We'll keep an eye on that.
This could work.
When you go any further, make sure you hit that like and subscribe button to support the channel. And also reference the +1 videos to get a deeper dive into our trading strategies. As of early December 2025, Bitcoin sits around 92 to 93,000 US dollars after a rebound from a slump near 84,000, bolstered by expectations that the US Federal Reserve will ease liquidity conditions and possibly cut interest rates, a move that tends to support risk assets and improve macro liquidity. However, geopolitical tensions and broader macroeconomic uncertainty still pose risks, and a breakdown in key support levels could trigger deeper corrections. Meanwhile, XRP trades around US $2.10, largely shadowing broader crypto trends. Some analysts are cautiously optimistic about a potential rally toward 285 by year-end if market sentiment and institutional flows improve. Yet others warn that without strong utility and institutional demand, XRP may struggle, possibly even dipping below $1 in a prolonged bear scenario. Ultimately, macroeconomic policies, institutional adoption, and geopolitical developments, especially around global trade, regulation, and financial stability, will likely shape whether Bitcoin and XRP diverge or move in tandem in coming months. So first, looking at Bitcoin on the weekly chart, you can see there it's been bearish now for a number of weeks. The CCI broke down, and that was a result of this bearish divergence, this lower highs on the CCI versus higher highs on the price that broke into our 23-38% Fibonacci range. And for those new to the channel, we measure that by taking a Fibonacci before the divergence started, and we take that as a minimum retrace at 23-38%. In this case, it fell right below it, and it came almost to that 61% Fibonacci retrace, which is a key Fibonacci level. But at the moment, somewhat still bearish on the weekly. Looking at the daily though, again going bearish from around about the 11th of October, and it had a bit of a couple of breaks here previously above the CCI, but notice the price was still below the moving averages, and in this case the same situation is happening so far. Now I wouldn't be going long yet. I'd like to see the price break above the moving averages, and ideally I'd like to see the moving averages turn up like they did here to be more better probability of success. This could be a bit early, like for example if you got in there when that broke into the moving average on the price but broke above on the CCI, you would have been caught out. So it could be the same scenario there. We'll just keep an eye on it, as I said, in the coming days, how it performs. On the hourly, we'll look for any micro moves. And by micro, I mean for any divergence. We had a divergence back here, bearish divergence. You can see it fluctuated down to about the 23-38% range, and it broke further down and hit below the 100% retrace. And since then, we had no divergence here. And where we are at the moment here, we do have a bearish divergence. You can see there, slightly lower highs on the CCI versus higher highs on the price, and we measure a Fibonacci range from that high, take it back to that low, and you can see there it's already punctured the 23-38% range with a couple of wicks there. This could still possibly break lower. Again, just be cautious. It's broken above the CCI on the hourly. The price is still below the moving average. So again, cautiously, I'd call that neutral. I wouldn't go long or short at the moment if you haven't entered the trade. But if you are going short during this period, I'd be closing it out once that CCI moves into that moving average range to book your profits. In terms of a back test, going short from the 11th of October, according to the daily trend, and in this case, we do average down and we do follow the moving averages. So you can see there a downtrend on the moving averages on the price. But notice here we had an uptrend on the CCI that was giving us a warning, and you would have closed it out once that moving average band starts to turn up at that point there. Avoid going long, start going short again from that point. You could have possibly kept into the trade there. The CCI was moving in tangent with the price, let it go, and then you probably would have closed it out once you started seeing this bullish divergence materialize, and you would have closed out somewhere in that range there, and you would have booked those profits. Notice here as well these drawdowns when you average down, these drawdowns you would have avoided because they would have averaged down against the trend. And what we're doing is I'm deliberately showing you this so you know not to trade against the trend, always follow the trend. And where we are at the moment, get rid of that Fibonacci for a moment. Again, if you're going short during this period, you would have been taking short trades only. You would have taken that little trade there, closing it out, and possibly enter another short position there, and possibly letting it run, or if you want to get really conservative, closing it out when the CCI touches the moving average band. So for XRP, on the weekly, first off, you can see the price is below the moving average, and so is the CCI, so bearish momentum. And that was a result of this long-term bearish divergence we had. It broke into that 23-38% range initially, those bottoms of those candles, and it finally broke into the range and broke below. On the daily, this has been bearish now since about the 7th of October, and you would have been going short during those periods. And at the moment, the price is below the moving average, but notice the CCI looks like it possibly might be just breaking a fresh breakout to the downside. So still bearish momentum, and we also look for any divergence, no divergence there. And then we go to the back test, again going short according to the daily from the 7th of October. Again, following the moving average of the price, and also following any leads you might get from the CCI. As soon as you start seeing an upswing on the CCI or a bullish divergence, you take note and get ready for any potential closures. Now again, there's a couple of drawdowns there, and you would have avoided those by avoiding going long in those periods. And where we are at the moment, as I said, going short only, would have closed it out there, close it out, going short again at that point, and you'd be still holding it on potentially, or if you want to be really conservative, close it out when that CCI touches the moving average range. If you'd like to get some share trading ideas, why not subscribe to the Patreon page? These are some of the shares we've traded and sold. These are all sold at the moment. And these all came up in the bullish share scans we run each weekend. And bullish shares are shared with our Patreon subscribers.
This looks positive.
And so far, since the 21st of September, we've made 14.42% return. So to get access to the Patreon page, consider subscribing. Links in the description below. Hit that like and subscribe button. Thanks for watching, and see you in a future update.